Hi guys, this video covers the changes which were made under Schedule 3. This will be applicable for CA Inter Accounts 1 and Advanced Accounts. Wherever you're required to prepare financial statements of a company, ensure that you keep these changes in mind. There were a lot of small changes made by MCA. In this video, I will only be covering those relevant changes which would be important for your exam. Now the first major change that I'm talking about is current maturities of long-term borrowings. We all know current maturities of long-term borrowings basically means the amount in respect of a loan which is payable within the next 12 months. The principal amount of a loan which is payable within the next 12 months is called as current maturity of long-term borrowing. Because this amount is payable within the next 12 months, it was never disclosed under non-current liabilities, it was disclosed under current liabilities. I repeat, because this amount was payable within 12 months from the balance sheet date, we always used to classify this amount under current liability and not under non-current liability. Even now it comes under current liability only. But earlier guys, your current maturity of long-term borrowings, I repeat, these are your Schedule 3 changes. Alright. So this current maturity of long-term borrowings earlier were disclosed under other current liabilities. Earlier we used to disclose this under other current liabilities. Now, revised scenario, you are supposed to disclose them under short-term borrowings. It makes perfect sense. A change that was actually required, because even if the amount is payable within 12 months from the balance sheet date, it still represents a borrowing. Because it represents a borrowing, it should have been disclosed under short-term borrowings and not under other current liabilities. So yes, current maturities of long-term borrowings is a current liability. But under current liabilities, instead of disclosing it under other current liabilities, you will now disclose it under short-term borrowings. A very important change that you're supposed to remember for the exam, because in a lot of Schedule 3 questions, preparation of financial statements, accounts 1 paper, in a lot of questions you will see this word. They mention what is the amount that is payable within the next 12 months. So you have to keep this in mind, that you're not supposed to disclose this under other current liabilities. You will now disclose it under short-term borrowings. This change is not applicable to current maturities of finance lease obligations. Now, if you have purchased an asset under finance lease, if you have purchased an asset of under finance lease, we all know that we record the asset by also recording a liability. This is as per accounting standard 19, or you also know this treatment we follow under hire purchase, because hire purchase is a finance lease. So we record the asset, we also show a liability. So this liability that we have is shown under long-term borrowings. But as far as the amount that is concerned, which is payable within the next 12 months, earlier it was disclosed under other current liabilities. Even now it will come under other current liabilities. Why am I talking about this? So that you know that the change is only in respect of current maturities of long-term borrowings. It is not in respect of current maturities of finance lease obligations. Current maturities of finance lease obligations would still come under other current liabilities. It will not come under short-term borrowings. So under other current liabilities as such, guys, you still have current maturities of finance lease obligations. I hope you are making a note of it. Current maturities of finance lease obligations will still come under other current liabilities, but current maturities of long-term borrowings will go to short-term borrowings. It will not come under other current liabilities. So this is the first change. Please do make a note of it, write it properly in your notes somewhere so that you remember all of these points for the exam, applicable from May 2022 attempt. Now the next change, I hope this part is clear, guys. You can pause the video, make a note of it in case you haven't done it. The second important change under Schedule 3 is, now we all know, guys, that under assets, the first category is non-current assets. Under non-current assets, the first side heading used to be property, plant and equipment. I am talking about the earlier part. I'm making a note of both, guys, so that you are able to understand it properly. Under that, we used to write tangible assets. We used to write intangible assets. Then we used to write capital work in progress. And then intangibles under development. Intangibles under development. Now, if you talk about the revised scenario, under the side heading non-current assets, the side heading to be used. See guys, it does not make sense to use the word property, plant and equipment as a side heading when you're also including intangible assets under it. We all know accounting standard 10 deals with property, plant and equipment, and accounting standard 10 describes them as tangible assets. Intangible assets are covered under AS 26. So the word PPE, property, plant and equipment, never covered intangible assets. That is why the side heading is now changed. Instead of just using the word PPE, you will now use the word PPE and intangible assets. It makes perfect sense. Instead of just using the word PPE, guys, you will now be using the word PPE and intangible assets. And under that, instead of using the word tangible assets, you will now use the word property, plant and equipment. All others remaining same. So instead of using the word tangible assets, you will be using the word PPE. So these are the two changes. Side heading, guys, instead of using the word PPE, we will now be using the word PPE and intangible assets. And instead of using the word tangible assets under the category beta, you will now be using the word PPE. Another important point that you're supposed to make a note of. I hope this change is clear. First change was current maturities of long-term borrowings. Earlier we used to disclose that under other current liabilities. It will now come under short-term borrowings. Second change is the wording used for the first category under non-current assets. Earlier we used to use the word property, plant and equipment, but now we use the word PPE and intangible assets. Under that, earlier we used to write tangible assets, but now instead of the word tangible assets, we use the word property, plant and equipment. So this will be intangibles under development. Last one. All right, clear, sir? This is the second change. Again, in case you need to copy this, please pause the video and finish it off. Make a note of it. Again, very important changes for the purpose of exam. The third important change is in respect of capital advances. No, sorry guys. The third important change is in respect of security deposits, not capital advances. Security deposits. Security deposit, beta, say for rental deposit. Example is rental deposit. So whatever deposits that you used to make security deposits, earlier guys, we used to classify them under long-term loans and advances. Earlier security deposits used to come under long-term loans and advances, but the revised classification, this will now come under other non-current assets. This will, assuming it's a non-current asset, so this will now come under other non-current asset and it will not come under long-term loans and advances. A very important change again, you can expect this in a schedule 3 question guys in the examination. So you see guys, your security deposits are now appearing under other non-current assets. They are not appearing under long-term loans and advances. They are not appearing under long-term loans and advances. They are now appearing under other non-current assets. So this is the next change. First change is current maturities of long-term borrowing. Second change is the side heading under non-current assets. Third change is in respect of security deposits. Earlier security deposits used to come under long-term loans and advances, but now they appear under other non-current assets. Apart from this, the other two changes that I need to discuss about is trade payables. As far as trade payables are concerned, we will have to disclose what is the amount that is payable to MSMEs and non-MSMEs. As far as trade payables are concerned, we will have to disclose what is the amount that is payable to MSMEs and non-MSMEs. So what is the amount payable to micro, small and medium enterprises? What is the amount payable to other entities? Usme bhi beta, under that also, you will have to disclose what is the amount which is disputed. The amount that is payable, is it a disputed due or not? So you will have to disclose what is the amount of disputed due, what is the amount of undisputed due. So basically two classifications, MSMEs and others. Under that also, is the amount disputed or not? Not just that, guys, they've also introduced an aging schedule for the amount of trade payables. So you will have to disclose whether the amount is outstanding for less than 1 year, is the amount outstanding for 1 to 2 years, is the amount outstanding for 2 to 3 years, or is it more than 3 years? So that whoever is reading your financial statements will know for how long is this amount remaining outstanding for. So trade payables, what is the amount payable to MSMEs? What is the amount payable to others? Is it a disputed due or not? And the aging schedule, is the amount outstanding for less than 1 year? Is it 1 to 2 years? Is it 2 to 3 years, or more than 3 years? I'm not writing that in the table there as such, but you have to remember this. What I expect from this in the exam is that they'll simply mention what is the amount payable to MSME, what is the amount payable to others. So keep a note of it. Remember the aging schedule also, guys. That is pretty simple. Less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Trade receivables also, guys, there's a change. This is trade payables. Trade receivables also, there is a change. Earlier we used to simply write trade receivables outstanding for more than 6 months and others category. Earlier we used to write outstanding for more than 6 months and others. This was the only aging schedule that we used to perform earlier for trade receivables. But now we will have to disclose what is the amount outstanding for less than 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years. Not just outstanding for more than 6 months and others. So like trade payables you directly have 0 to 1 year, but here you have 0 to 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years. This will help a lot to the investors or anyone else who's interested in the company. When they read the financial statements, they will know for how long is this amount outstanding for, that is receivable. So they will have to show what is the amount. The other classification is there, guys. What is considered good, considered doubtful. So that classification is still there. That is not gone. So you will have to write them as disputed and undisputed. Disputed, considered good. Undisputed, considered good. Disputed, considered doubtful. Undisputed, considered doubtful. And this aging schedule with that. 0 to 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and others category. These are the major changes that are relevant for you as a student for the purpose of examination. There's another change as to how will you be determining, rounding off. To what extent can you round off? Earlier it was based on revenue, but now it is based on total income. That's another change that they brought in. Earlier it used to be based on revenue. Now it is based on total income. Total income matlab, guys, it is both revenue from operations and other income. How are you supposed to round off? Aise beta, there are a lot of small changes, but then do remember about these 5 major changes. Let me repeat. The first major change is current maturities of long-term borrowings. Earlier this used to come under other current liabilities. Now it will come under short-term borrowings. The second change is the side heading. Instead of using the word property, plant and equipment, we will now use the word property, plant and equipment and intangible assets. Under this, the very first one was tangible assets. Instead of the word tangible assets, we are now going to use the word property, plant and equipment. Next, security deposits. Earlier it used to come under long-term loans and advances. Now it will come under other non-current assets. And then apart from this, the aging schedule of trade payables and trade receivables. Do remember these changes, guys. All the very best for your examination. Do well. Bye-bye, guys.